I think that's one of the greatest benefits of being, or at least having the financial and wealth management background experience is being able to see someone's financials and understand who they are based on those financials and say yes or no, basically.
Hello, everyone, and welcome to the Journey to Multifamily Millions. I'm your host, founder, and CEO of Zana Investments, Tim Little. And on today's show, we have with us Dylan Clark. Dylan is the CEO of Dylan Clark Consulting, as well as a fund manager and chief financial officer for Abundance Asset Management. His goal in the financial industry is to help as many people as he can break out of the middle class and achieve their dreams. Dylan, welcome to the show.
Hey, thanks for having me, Tim. Great to be here.
Yeah, and it's great to have you. So, I gave everyone a very high level overview of your background, but on the show, we really like to get into the details of how you got started. So, please take us back to the beginning and tell us how you got to where you are today.
Absolutely. So I had actually started in the financial industry at 14. Reason being behind that, my parents were never good with money. They still aren't the greatest with money. A lot of, overusing the credit cards, not having enough money to pay the bills, buying the extra stuff that led to problems after problem. The typical story that you hear. And I decided very early on that I don't want to be like that. I don't want to have those types of struggles. So I started diving into finance to figure out how I can not do that. Started off with Dave Ramsey, actually. I know a lot of people have their disagreements with him, but that's where I learned. Getting started in the finance world, you hear so many things and you just have no idea what's going on. So it was nice to have someone who dealt with everyday people themselves and built a business around that. He knows how to talk and make it make sense, basically, without being some high level guy using big terms just so you stop talking and give him your money. So that was nice to have a gateway into that. So started in that path, learned as much as I could about basic level finance. So many different realms that you can go from there. There's a lot of debt, and then the investment side, you have real estate, you have equities, then you have derivatives of equities, then you have all these different companies, mergers and acquisition side, private equity that I eventually learned the official terms for now, but buying businesses or starting your own business and whatnot. I fell in love with equities in the stock market. I love math, I love pattern recognition, I love analytics. So that's what I chose to go with, also because it was a challenge. That helped a lot as well with that decision. And then so at 16, about 2 years in of learning, some buddies of mine, we all started an online education company through Discord, and we grew that to about 10,000 members over the course of 6 to 8 months on a subscription basis, which was really fun. We were constantly in there live trading during school. We would sneak off to go different places with our laptops to set up live streams and stream and coach and trade and whatnot. Got in trouble a few times for doing that, but we were making money and having fun. From there, we really just kinda kept going with that for a little bit. Some of us took some different paths as we got older and we're gonna graduate high school. Not everyone that we were able to coach and teach was successful at it. I took that personally and wanted to figure out a way to just trade for them. How do I invest and manage their money for them? The only legal way to do that is to get your Series 65, become an RIA, and trade for them on that behalf. For those of you who know, there's other licenses you can get on the broker-dealer side, but that's the one I went with, was my 65. So got my 65, started bringing on a lot of those individuals as clients and trading for them. Went pretty well. I still talk to a lot of them today. Their portfolios are doing great. They're still all actively learning so much on the day trading and investing side of things, but more on the financial literacy. How do I not take on bad debt? How do I get rid of my bad debt? Credit card utilization, all of these different things that play a bigger impact than just trying to learn how to trade and invest. Anyone can invest. You just throw money at something and kind of hope it goes. But if you don't do the financial literacy part of it, you're not going to have the money to throw and hope it goes. So from there, I started working with the investment advisory firm, learned a lot there. The biggest thing that he had hit on and taught me, because he never once has had a disclosure, which is something that is put on your SEC record whenever there's a complaint filed or you've done something wrong. And I mean by my mentor and boss, the one who had me a chance at working with him. So learned a lot about compliance from him and how to operate safely, smoothly, and within reason and letters of the law. And with that also comes, how do we do things in the gray area as well that don't necessarily get you in trouble either. But love that aspect of it, love learning all of that, and then just being in that industry, working with the people that we were working with, learned a lot about contract law and how to structure different things. Also, taking the 65 exam, you learn a lot about securities law, at least high level securities law. What all these different acts do, what are the ins and outs of them, what can you do, what can you do, so on. So fell in love with that side of it as well, and just kept diving deeper and deeper into it, figuring out the intricacies of what is a hedge fund, what is an exempt offering, what is a 506B, what is a 506C, Reg A plus, CF, so on and so forth. Okay, that's great. Now we have that. How are these things structured and implemented? Delved into that, broke it down, put it back together. Basically, taking an engine apart. When you take it apart, you mark all the pieces and you figure out how it goes back together, and hopefully it works if you're lucky. So that led down that path, and recently coming to the real estate side of the world within the last year, seeing everyone getting started in things, it's a lot different than the hedge fund world. It's not every day that you hear someone saying, "Hey, I'm gonna go start a hedge fund and trade securities for people." So the real estate world is very different in that aspect. There's tons of people out here doing exempt securities offerings, whether it be syndicating or through a real estate fund in this space. There's thousands, and to see them go through all the coaching courses and be taught nothing about the legal side, and the things that they are taught most times are actually wrong. It was a bit worrisome that people are paying tens of thousands of dollars to go through education courses and classes that, one, they could actually get online for free if they really wanted to. But you pay for the network there is my belief system for that. But then you pay that type of money, and they still don't know anything about how to operate properly, at least within the law. They understand the basic principle of, let's go raise capital, let's go get all of our investors in, let's make sure reports are sent out on time, let's learn how to properly do due diligence on a property. That's all fine and great. It's awesome that you know how to do that, but if you don't know how to keep your company safe in securities laws and are doing the right things in that area, your company's worthless once the SEC gets involved and they find something that you did wrong. So that's the reason why I started up the company that I did not too long ago, was to really break into this space and try and help as many first time syndicators and or fund managers get started and off the ground running, because it is scary. It's a very scary thing whenever you first come into it. You hear all these different terms being thrown around. If you just break it down simply to a real estate side, just understanding properties and real estate values and how to do due diligence, that's scary in and of itself, let alone adding in, you need an LLC here, this one's managing that one, and under here we have an LPA with 2 class member shares, so on and so forth. I mean, it's a lot for someone to first time take in. And then on top of that, they want you to drop anywhere from 15 to 20 grand on top of that to set up those documents. So, that was I think that was the biggest kicker for me, was the price factor behind that. Was it should never cost that much to get up, running and started. I know what the amount of work it goes in to create those docs. It's not $15,000 worth, I'll tell you that much. And then a lot of times, the individuals that you get the docs from, typically a bigger law firm who does know what they're doing. So I'll give them that credit, and don't nothing wrong with ever going to them by any means. I'll never say that. But for a first time individual, I feel that there's a lot more hand holding that needs to go on, and deeper explanation of how everything works and operates, so that way you are comfortable with what you're doing and have a good understanding of what it is that you're actually involved in. And I feel that typically that area is lacked on quite a bit. People are just left to defend for themselves, which is another thing that I pride myself on, being able to be different in that aspect in the compliance and legal world.
Yeah, and I guess I would say the best way for those folks who are new or have never done a syndication before, my recommendation would be to partner up with someone else, someone who is more experienced. Because and some people do come out of the gate and they're like, I'm going to do everything myself and I want to do my own deal. And that's great. And I applaud that enthusiasm. But in terms of risk mitigation, it's much safer to partner up with that person who has more experience, who has done a couple of deals already, and say, hey, I want in on this. I'm going to be a GP and a general partner, and this is how I'm going to add value, whatever that is. And then once that agreement is kind of leaning on that experience of that more senior operator so that one, you could learn, but hopefully two, avoid some of the mistakes that would be made by someone doing this for the first time. And like you said, not as much of the focus goes on the legal compliance. I mean, granted, we do usually just put it in the hands of those SEC attorneys and say, keep me out of jail because that's their job. Yeah. That's my only recommendation to folks is, obviously seek out professionals like you and attorneys, but also seek out those folks who have the experience so that you can lean on them, not have to feel like you're learning it all for yourself that first time.
Absolutely.
Yeah. So I wanted to go way back because you started pretty early. And I wanted to talk about that first, I guess, business, I would call it, or venture, where you started on Discord and you had an online education company. I assume you were talking about basically teaching people how to trade. Is that correct?
Correct.
Yeah. And were most of these folks in the same like age group as you, or were these like more established in the workforce kind of folks?
It was definitely a hybrid blend. That we had our big group of younger kids. I guess I was a kid too, but younger people who, were my age in college, maybe just graduated college. But we definitely had our fair share of nurses, doctors, all of our blue collar workers, engineers, other finance people as well in their 30s, 40s, 50s. Had tons of doctors and people with PhDs, MDs, MBAs all in our group. A good friend of mine, he's 50, just retired last year, and out of that connection, I actually went to his wedding last year. I was a groomsman in his wedding, so we definitely had a big diverse blend of individuals in there as far as age and even occupation.
Yeah, that's interesting. And I mean, and of course, that's the way it can go, right? On any Discord group, you can get all types. I guess I'm thinking back to when I was in high school, and I will be dating myself a bit here, but I was working at Taco Bell making four and a quarter an hour. And I did not have what we would call disposable income above maybe going out to fast food myself on my off time. So that's why I was curious more so as to where the disposable income to invest was coming from, especially with the younger investors.
So a lot of the younger investors, we just had paper trading, which is a simulated account, just
Oh,
practicing and learning. Pain in the butt to open an account if you're not 18 because you need to get your parents involved. And then if you're a 16-year-old high school student going to your parents saying, "Hey, open up an account at TD Ameritrade for me." Well, there's a lot of it's just a pain, but no one wants to deal with it. So a lot of our younger students just paper traded until they were 18 and then could open up their own account. They had 2 to 3 years of simulation time into it already, practicing with the amounts that they would actually be trading with. They weren't running $1 million dollar accounts. They were playing with 1,000, 2,000, 3,000. And then by the time they did get 18, had the 2, 3 years of simulated experience in there, and then we're able to just replicate the same thing on real and live money.
yeah, no, and I think that's awesome. I think people don't talk about that opportunity enough, right? Like that practice that you can get as long as you treat it like it's real and you don't get too much in that gamified mindset
Right.
of then you can learn some valuable lessons without necessarily the devastating downsides of losing thousands of dollars. So I think that's great. And when you had this platform, were you able to monetize it at all? You said you had a subscription. Were you
Yes.
able to make money while you were doing that?
Oh, yeah. I mean, you got 10,000 people, say we have a 10% conversion, 1,000 people paying 20, $30 a month. You can monetize pretty well.
Oh, okay. So yeah, you had a monthly subscription for the Discord itself.
Yes. So
Oh,
all of our education we kept free. All the chat rooms we kept free. The live streams and live trading, live coaching sessions, and then the alert system that we had that would track our trades that we would post were on the pay side. Because we wanted to create an environment where, you didn't have to pay to get everything. If you just want to come in, hang out, learn, ask questions, awesome, come do it. Come learn. All of our education's free. All of our YouTube videos are public. Come on and hang out. If you want to dive to that deeper level, take it more seriously, then we felt, okay, we're taking time out of our day to do this. Yeah.
yeah. No, that makes sense. And I've seen that kind of follow our trade method on other sites too. I think that's really smart. So then you looked at getting your 65. And can you explain to us a little bit about that? What does that confer onto you the title of registered investment advisor? Do I have that right? Or is it
Yes.
a bit different?
So Technically, as an individual, everyone is an investment advisor representative. Doesn't matter what. The registered investment advisor is the firm, but the firm has to have over $150 million. Otherwise, it's just an investment advisory firm. So they mess with the terms, titles, and words, but it's just a pain in the butt. But for simplicity, yes, just registered investment advisor. Anytime you hear that, it's going to be someone who is an investment advisor working at an investment advisory firm.
Okay. And one of the things that I've heard about that is that the requirements to keep it up can be, I don't know, a pain, can be onerous if you're not using it actively. What are the associated costs? And is there anything or retesting requirements associated with having the 65?
So there's no, or I'll just break it down first from the beginning. So the books, exams, plus the actual exam that you have to take, I'd say budget $600 for that. 600 to 1,000 depend on what education material you wanna go through. If you wanna get a book, live coaching sessions or training sessions, plus quizzes, practice exams, you're gonna pay more the more you get. Anywhere from 600 to 1,000 will get you all the way through. From there, if you don't have a firm to register with, you'll have to actually create your own investment advisory firm, which is gonna be about another 5 to 7,000. Then you'll have yearly registration costs for that firm and for yourself, call that another $1,000. But after that, you're good. There's no retesting, there's no what do they call it? I have to do it for my insurance licenses, but I just can't remember what it's called. I have to get education credits, continuing education credits. That's what it's called. There's none of that for this. Now, if you do take the exam and you are with a firm or whatnot, then you leave after 2 years of not being an active representative, your license does go inactive and you have to retake that.
Okay. Yeah. So in terms of the financial costs, it's not nearly as bad as I thought it might be.
No,
So
it's
that's
not bad
good.
at all. The hard part, or I guess the expensive part, is if you have to start your own firm.
Yeah. Okay. And so how have you used that since then? Have you been mostly helping people again with trades, or have you used it in other as an investment?
A lot of it was on the trading side in the beginning, and then as I delved into that world, continuing to learn and see how things operated and figuring everything out opened up a new line of sight to what else is possible. There's more to the world of investing and wealth management than just give me your money and let me trade for you. There's a personal aspect to it. There's understanding who that individual is. Not everyone wants to be in security, so then you have insurance, then you have bonds, then, you have your REITs, so on and so forth, which I know is security, but let's call it real estate in general. Then you have your oil and gas type of deals, all these different types of things, and then you see people from all walks of life who have done a bunch of different things all over the world, some haven't, so on and so forth. You just learn a lot, and that kind of broadened, I guess, the scope of what I could and couldn't do. And then coupling that with learning about the compliance side also really showed me what I really could and really couldn't do.
Okay. And as it relates, you started talking about real estate and some of the things associated there. Obviously, we could go down a rabbit hole in terms of all the different SEC exceptions: 506C, 506B, Reg A, Reg CF. There's a lot of different topics there. Why don't you tell me about how do you work with people who have invested in those different things, or how do you advise them? And do you have any preferences when it comes to the different, I guess I'll call them regs?
I typically only would have people operate in a 506C under most conditions. One, for those who have dealt with non-accredited investors, they can be a pain, a lot more so than your accredited investors because, someone with $1 million cash giving you $100,000, it's not as big of a deal to them as someone with 200,000 giving you 100,000. Most likely, the accredited individual was actually easier to get on board than the non-accredited investor anyways. From a time and energy standpoint, just deal with accredited. Also, having that 506C side, you can advertise and market. If you don't have a large network of people that you've been building up for years, there's no reason to do a B. It's just silly. Yeah, having the 35 non-accredited might be cool and great to get your first deal up and running and off the ground, but to me personally, from what I have seen happen several times, you're just gonna set yourself further behind in the long run.
Yeah, and for the listeners, I'll just give some background. So when we say 506B, what we're talking about is a syndication where you can bring in non-accredited investors. An accredited investor being someone with $1 million net worth, not counting their personal residence, or someone who makes $200,000 a year. A little different when married couple, just up the numbers a little bit, but for the most part. And a 506B, you can take in unaccredited investors up to 35. The point that you're getting at is they're usually less experienced when it comes to investing. The money that they're investing is usually a larger portion of their overall net worth compared to those accredited investors. And so then you have the 506C, which only takes accredited investors. And then the added bonus there is, like you mentioned, you can advertise, right? So you can put Facebook ads, you can throw it on LinkedIn, you can pretty much do whatever you want with it. And with a 506, because you're putting this deal up to those, say, less savvy investors, you're not able to advertise that. You have to have an established relationship with them. And we won't get into what that means because the SEC is not very clear on it, but you have to know them and have known them for the past 30 days prior to the deal getting started. So I understand why people do Bs, and I've done 506 Bs myself, because you have a few investors who come to you and they're not quite accredited, but they want to invest. And it's hard to turn that down because you want to help people get into this alternative investment. I mean, one, because so many people are virtually only in the stock market that it's a way to help them diversify. And so if we only went with those accredited investors, then there'd still be this segment of people who got left out. Now, everything else you said was still true, right? They could be more problematic in other ways just because of their lack of experience in doing it. And you really just need to understand what their investing goals are, what their financial situation is, so that you can do right by them as well, and not take their money if it's not appropriate. So you have to make that judgment call, I think.
Absolutely, and I think that's one of the greatest benefits of being or at least having the financial and wealth management background experience is being able to see someone's financials and understand who they are based on those financials and say yes or no, basically. And it there's times where I wish I could have taken an accredited or a non-accredited over an accredited just based on a lot of different factors. But as managers of money, it's something that a lot of people I feel don't think about, but you need to understand how to do financial analysis of individuals, I guess, individual people. I'm sure there's tons of wealth management courses online. Go take one. Figure out how to look at someone's income, assets, equity holdings, all of this, and figure out, is this investment actually suitable, and am I upholding my fiduciary obligation to this person by putting him in this? Because I think that's a lot of people what people forget, and they don't understand what the word means. As a GP or a fund manager, a syndication manager, you have a fiduciary obligation to all of your investors and or clients. You have to do what is right by them, no matter, what it does to you. If it sets you 50K behind and you only need 50K to close that deal, but it's not in their best interest to do so, legally can't take that money. Do people all the time? Absolutely. Is it wrong? Absolutely. But you just shouldn't do it. So I think taking even a simple course like that would probably do a lot of people some good. And everyone likes learning. And if you don't like learning, learn to love learning. It's great.
Yeah, absolutely. And I think you're right. I think it's a lot of times it's not like nefarious or anything. It's just new sponsors, syndicators, whatever we want to call them. I think that they're so eager to get deals done that they're willing to take money without being more critical about what that passive investor is really trying to do. There's different deals that fit different criteria. If I have a property and it's 95% occupied and it's only a couple of years old and it's a very light value add or something, class A, then that's probably going to cash flow pretty well. And so maybe that makes sense for that investor who's looking specifically for cash flow. Whereas something else that I have is a B, moderate value, older, etc., then that one's probably going to be more the appreciation, the equity play on the back end, and maybe won't get even a distribution until 6 to 12 months in. And that's okay. It probably makes sense for that deal, but we just need to make sure that it makes sense for that investor as well. Because the last thing we want is to just take their money, assume that it makes sense for them, and for them to have a bad investor experience. Be like, oh, why am I not getting a distribution? Why is it taking so long to get a distribution? I need that cash flow. If you needed that cash flow, that probably wasn't the right deal for you. So I see that sometimes. And so that's probably an area where, especially those new sponsors, could do a better job and just be mindful of that, I think.
Yeah, and that's something I aim to achieve and accomplish with what I'm doing, working on figuring out the logistics of it, of being able to do that for the individuals that I help get syndications and funds set up for. An additive service of, hey, as your investors come in, send them my way. I'll go through everything, check mark yes or no, and we can do that.
Yeah, and that's the question I was going to ask next. On whose behalf would you see yourself working on, or and this might be a both answer, on the part of the sponsor, or would you be more working for the passive investor, whereas you're helping them vet the deal and ensure that it is a right fit for them?
Probably both. Just as a intermediary third party, understanding both sides of the coin. This is great. I'm supposed to help the sponsor, the syndicator here, make sure everything, in compliance, everyone's good to go. All the financials are in order for this individual. However, like you were saying, if someone needs a cash flow deal, but this is a 5-year equity play, okay, I would love to take your money. However, here's what this is. Given what you're saying, you may not want to do this, you probably shouldn't do this. If you would like to proceed, you may. Here's the other side of the coin. I have no problem being that objective, unbiased person in the room. I don't wanna hurt anyone or make anyone mad. It's something that has to be done, because the last thing you want to is to find someone who wants cash flow, but it's an equity play deal, and they're not getting any distributions, or at least the distributions that they'd hoped for, and then they file a complaint, and you have to go down the rabbit hole of that.
Yeah,
So,
no, I couldn't
be
agree more.
yeah, be way better off having someone say no than have to deal with that.
Yep. There will always be more investors. It's better not to burn that bridge with any one investor because, I mean, I'm sure as your reputation plays a huge part in your
It's
success or failure in this business. Success
everything.
or-
Yeah, it is everything. You could have a mediocre track record with a great reputation, and you'll outperform the individual with a great track record, but a bad reputation.
Yep. Absolutely. All right. Obviously, this question is almost required, but you're relatively young. And do you find that people are reluctant to take you as seriously because of your age?
I think it's a 50-50. Whenever they first meet me and find out how old I am, yes, immediately it's a bunch of red flags that get thrown up. As the conversations develop and they hear me speak, get to know me better, understand what I know, most times I know more than they do about their own industry or own field and what I'm doing, and project that knowledge out that I do know what I'm doing. There's a reason I'm here and have been successful at it. It tends to go away a little bit. It's a trust building factor. I have to do it more than everyone else, which is fine. I have no problem doing that. But I think that's the biggest thing. Typically, you spend a couple calls building that trust and rapport with people. Traditionally, for me, just double it. It just takes a lot more time to, I think, accomplish.
Yeah, and I would say you have absolutely the right attitude of being okay with it because, I mean, honestly, you're getting started so early where so many of us transition into this later in life, even as a second career. So to get started so early, you'll be so far ahead of the curve anyways. It's okay if it takes a little bit longer to convince this person or that person that you know what you're talking about because you're already like making leaps and strides ahead of your peers, certainly, but a lot of people that are already in this industry. I mean, just think 5, 10 years down the road where you'll be given where you're starting now.
Yeah. I mean, in a little over 3 years, I've been investing and trading for a decade. I mean, it goes back a long ways. There's a lot of experience already at a young age, so it helps having the experience. It's just getting over that age hurdle. That's the biggest challenge for sure.
Yeah. And hopefully someone listening to this that's around your age gets inspiration from that. Cause I mean, we all find situations where people don't take us seriously, sometimes to their own detriment, but people should go into these things with an open mind. And I don't care who that person is. If they're an expert, they're an expert. I'm willing to trust them as such, as long as they present themselves like one. More power to
Absolutely.
you.
Yeah, it's if you're I mean this with utmost respect when I say this. If you're a first time and someone maybe half your age would have been doing this longer than you, you have to realize you may have done a 20-year career at somewhere else, but you are coming into a brand new field, a brand new world. While yes, you do have the life experience, you do have the work experience from whatever you were doing beforehand. This is a new world for you, but it may not, or I guess it may not be to the individual who has been doing this for several years. So just because it may be half your age or a decade longer doesn't actually mean that more than they do about any of this.
No, not at all. And I mean, I can attest to that. So my background was largely military. Most of my adult life, working life was in the military until I got out. And then I went back to grad school and got a job with the civilian sector. And so I had to humble myself because then I was working with people that were, I wouldn't say significantly younger than me, but a pretty good amount younger than me at the same or sometimes in charge of me. And that's, you have to humble yourself, when your bosses are 10 years younger than you or something like that. And I was able to do that. Was it easy every day? Not necessarily. And then same thing when I switched over and started doing the multifamily route. Sure, there's people who are older than me, but there's also people who are 20 years younger who are just straight killing it. And if I can learn any lessons from them, then I am more than happy to do so. I think that's key right there for anyone else who's listening is to humble yourself, especially if you're coming into a new industry. Certainly bring the skills and experience that you have, but don't presume that other people know less than you just based on age. All right. So we are losing time here. So we need to move into the turbo round. All right. So I'm going to ask you 3 questions that I ask every guest that I have on the show. And I'd just like for you to give me a quick, honest answer. All right. The first question is, what is one red flag every investor should look out for?
Double your money in 5 years. I've gotten and have seen so many emails with people blasting out messages for deals saying 2.2x multiple or double your money in 5 years. It doesn't work that way. It may happen, but that's just not how the world. First, that's illegal. They can't do that. They shouldn't be doing that. And if you see it, report it. I feel like so many people get drawn into flashy things and flashy words and whatnot without actually looking into the details. A lot of people also don't know how to look at the details. They don't know how to look at a financial sheet or an underwriting Excel sheet and know what all these different numbers mean. They don't know how to run hypothetical models on what happens if occupancy goes down to here. So you get what I'm saying. As an investor, you need to be at least somewhat educated on what it is that you're getting into. Yeah, you can throw a leap of faith at a friend or something, but just know that this can still go wrong. Just because they're your friend doesn't mean that they can save you from reality. So I think investors just don't have a good enough sense generally of what it is that they're ever getting into. Don't know how to do proper due diligence and look at any type of investment, doesn't matter what it is. And they get taken advantage of.
Yeah. And so I think the key that you're getting at there is investors, passive investors specifically, need to educate themselves on how to analyze these deals too. Maybe not to the same extent that a professional underwriter is, but still they need to understand the top line stuff. And equity multiple is a thing.
Yeah.
The other important thing to remember is all of these are projections. You better never hear the word guaranteed, because if it's guaranteed follows the end of that statement, then that is certainly an issue. But yeah, and I think the reason that so many sponsors, and I've done this myself, kind of default to that is because of its simplicity. When you start talking about cash on cash returns and average annualized returns and cap rates, like some people's eyes just glaze over.
Oh, absolutely.
Because they don't understand that nuance. But if I can tell someone, hey, over the course of 5 years, you're projected to double your money, not guaranteed, but based on the pro formas that we've done out, and then you can break it down year by year, month by month, how you got to that number. It's just so much easier for them to understand.
Right. Or even background checking your sponsors, figuring out who they are. You may not even have to do due diligence on the deal. Figure out who your people are. Have they failed at this before? Have they succeeded? What's their track record in doing this? Do they
Yeah.
have, what's their court record look like? What's their SEC record look like? Even just something as little as that. I think doing just a little bit more research on who you're getting in the bed with, I think would help a lot of people.
Yeah. Quick Google search goes a long way. All
Yeah.
right. Question number 2. What is a myth about this business that you would like to set straight?
It's passive and easy. There's nothing passive about it, and there's nothing easy about it.
I will challenge you a bit if you say there's nothing passive about it. There is a passive aspect.
There's a
but
passive, but it's not what's
truly
pitched.
passive.
It's not
Right.
what's pitched. It's not go do this and then you sit back on the beach and sip Mai Tais and it just runs itself. You don't have to do anything. No, it's a job. You have to manage things. You have to manage money. You have to manage investors, the property, the assets, people who are helping you. You may have a manager running the asset and him and his team. You still have to manage them. It's not passive. Well, it is passive, but it's not as passive as they say it is. It's still a full-time job.
And I think that's where different passive investors take a different approach to it. Some are much more hands-on and they're doing that due diligence up front. They're reading every monthly update that they get and asking questions. And then there's other folks who maybe that level of trust that they have with that operator because they've gone through 3 or 4 deals with them full cycle, they just back it up a little bit and let that trust take over. And I'm not saying one is right or wrong, but
Right.
yeah, I'm definitely seeing both sides. But there is certainly an onus on that passive investor to do their own due diligence and to not just work up front, because that's what we talk about a lot of times is doing the work up front, because it's certainly important before you hand someone your money, but also getting that interest and asking questions throughout the life of that.
Yeah, absolutely. And then the myth of it's easy. No, it's not easy. It's a lot of work.
Right. I mean, part of it is just that education piece, right?
Yes.
Yeah, they don't have the time or patience to learn what I think you should learn to make yourself an educated investor.
Yeah, I like to explain investing this way. Compare it to a college. How hard is it going to be to get a college degree in a year? It's going to be pretty freaking difficult. Could you do it? Maybe. I don't know. That's a lot. Whenever you're looking at understanding investing, people go and get 4-year degrees and then they go and get their MBAs and all these different things before they even touch this field. So don't come into it day 1 or year 1, year 2 and expect it to be easy and have it all figured out from the get-go. It takes time.
Yep. All right. The final question. What does success look like to you?
Sounds cliche, but seeing other people succeed, because I know if the people that I'm working with, if they're succeeding, I'm going to be succeeding as well. I think that would have to be I mean, also, of course, having the financial freedom, not having to worry about bills, have my family and generation lines taken care of course, that's part of success. But at least for success for this company and myself being a part of it, it's definitely seeing everyone that I work with succeed. Because like I said, if they're succeeding, I know that's coming back to me and I'm going to succeed as a result.
Yeah, absolutely. And it reminds me of that phrase, doing well by doing good, right? Able to make a good living for yourself by helping other people succeed. And I
Absolutely.
think that's important. All right. Hey, Dylan, this has been amazing, fun conversation. Please tell our guests how they can get a hold of you and if you have anything else that you would like to share with them.
Yeah, best way to get a hold of me is on LinkedIn, and I can send you my Calendly link as well to throw that in the description of this video so you can just schedule a meeting right there. I'd be happy to chat and see if there's any way I can help you or you get up and running, operational, whatever it may be. I'm happy to have that discussion and explore and see what we can do.
All right. We will definitely have all that information in the show. Again, appreciate you coming on, and I look forward to seeing you do big things on your journey to multifamily millions.
Thank you, Tim.
All right. Have a good one.
You as well. Bye-bye.